Hello everybody. So today I want to talk about solar stocks. I've put them into my spreadsheet. Feel free to take a look at it, and let me start with my commentary on solar. So first of all, as you know on this channel, I love Enphase. Enphase is one of my top positions. It's in the top 5 actually. HIMS may eclipse Enphase pretty soon, but not yet. I still have a bunch of Enphase. Love the stock. I think it's the most compelling stock out there when taking into account both qualitative assessment and the numbers. When you look at this spreadsheet, you can see there's other stocks that are very compelling in the numbers. For example, Canadian Solar or Shoals. When you look at just the numbers, these companies look quite interesting. But I also like to look at, say, things like the subsidies and things like the technology. And Enphase is set to get so much subsidies for making these microinverters is not even funny. As I published videos about this before, the net present value of the cash payment alone from the manufacturing subsidy is bigger than whatever Enphase is trading at right now. This is not the case for, say, a Canadian company or for, say, an Israeli company. In the case of SolarEdge, who doesn't manufacture much in the US. And this is not the case for technologies like string inverters, which are older techs, which don't get paid as much from the government under the IRA. Solar businesses are quite complex to analyze. It's really a good idea to be an insider of industry. I'm not. I actually used to be back in 08, 09. I remember in France, that was a big deal. This is an industry that's gone through booms and bust cycle multiple times. But don't let the booms and bust cycle fool you. This industry is growing very, very fast. And on this channel, I focus on hypergrowth stocks. I focus on industries that are growing fast. Whenever I talk about solar, what do I say? I say I take a walk in my neighborhood today. I see about 10% of the roofs that have solar, right? I take a walk in my neighborhood. In 2040, I'm expecting most roofs to have solar. It just makes that much sense. If you put solar on your roof, you can eliminate your electrical bill. Why do I prefer residential solar over commercial solar? Because the size of the residential market is so much bigger. The last time I looked at that, I came up with something like 8 to 9 times bigger. 8 to 9 times bigger than the commercial market. The residential market is where the money is at. There's so many more residential buildings, homes, at least in the United States. There's almost 90 million homes in the United States. Most of them don't have solar. So think about the value capture per house. Enphase shows this slide on their deck, on their investor deck, talking about capturing between $12,000 and $18,000 of value per single family house. And that would be just for just the US. Imagine around the world. Imagine how fast that could be. So solar is an industry that is in a secular trend. You are taking the solar energy, you're taking the nuclear reaction in the sky and turning it into energy. It's a decentralized technology. It's a technology that each homeowner can own. And I believe solar at some point will be as pervasive as, say, the ice maker in the fridge, or as, say, the AC or the hot water tank, the boiler. It will be very pervasive in my view, because it makes so much sense. This technology makes a lot of sense. And really, I mean, at the end of the day, this is just an opinion. What is not an opinion is the performance. Right now, we're focusing on these stocks and we're saying, oh, look, the performance has been awful, but we don't zoom out, right? We need to zoom out. And if you zoom out, so on this channel, I would never compare any of my stocks to the S&P 500. That would be unfair because the S&P 500 hasn't performed too well. But let's compare them to the NASDAQ. So you see, I'm taking roughly, you'll forgive me on this. I'm doing like a rough analysis. So the NASDAQ, over the past 12 years, it roughly went up, almost a 6x, right? I mean, it's like up 570%. So almost a 6x. Let's call it a 6x. Right. If you take a company like Canadian Solar, and Canadian Solar, of course, right now is not doing well. It's the crash. It's the end of the world. But remember, these are stocks that overshoot to the downside and overshoot to the upside. And if you're being fair and you just look at, kind of the middle of the downside to the middle of the upside of the early 2020s and the middle of the downside of the early 2010s, you're still at almost 11x your money, right? You're still at almost an 11 times performance. Granted, right now we'd be at a performance closer to the Nasdaq, but I believe this is really a valley of despair for solar that we're going through right now. Over the long run, right, this is a secular trend. Over the long run, I think we will see more spikes in this stock. So you see, that's 11 times your money in a 12-year, in a 10, that's not even 12, that's a 10-year period here. And if you look at Enphase, of course, my favorite stock, which I believe has a winning technology, you take the same period, that's a 16 times your money. And that is despite the stock having lost so much value over the past 2 years. I mean, this stock is down 70 to 80%. The way you look at it, well, you're still looking at a 16x over a 12-year period. So in my view, for me, from my portfolio, no advice, no financial advice, but just for me, for my portfolio, this is the time to buy these stocks, right? For me. So, and that's what I'm doing. And I've been adding to Enphase periodically. Of course, there's a lot of opportunities right now, not just Enphase, but I believe the solar will rebound. Solar is rebounding. Especially in Europe, but in the US it will rebound too, in my view. And so let's look at the numbers. So the problem with the companies that deal with a lot of residential solar, and remember, Canadian Solar is a bit of a hybrid. They have a little bit of both. But if you look at, say, Enphase, SolarEdge, Tigo Solar, and Sunpower, which are almost exclusively residential, the problem is that this is where the space is hurting right now, and it's a space that's hurting because of interest rates. Interest rates are very high. Do people get financed, 10% to put solar on their roofs right now? Not exactly, not really. And so that's why we have roughly flat sales for all of these companies. And actually, analysts sometimes are pretty negative, and I don't buy that at all. So my spreadsheet really penalizes companies that show next to no growth or no growth. It's not, these companies are not going to do well on my spreadsheet, and that's why Enphase looks like it has a nosebleed valuation. But this is more indicative of the failure of the spreadsheet to analyze the fact that this is a company that can easily rebound the growth as soon as rates come down. Right, as soon as rates come down, the growth can go back up quite a bit in my view for Enphase, and the technology is also nothing like SolarEdge is. And if you've been following the channel for a while, I've done head-to-head comparison between string inverters versus Enphase inverters, and there's no comparison. One of them is a 0-to-1 move, another one is not, right? And Enphase microinverters, by the way, they're gonna get better. They're gonna be GaN. If you look at the IQ9s, they're gonna be gallium nitride microinverters, which are gonna have so much more power. And much more efficient, performance, much more in line with the string inverters when these GaN microinverters come. And of course, we know, if you love the microinverter space, it's all about the power. The more powerful these pieces get, the more IRA subsidy Enphase is going to get. And these subsidies are until 2034, with a phase out that's going to be fully ended in 2035. I've rarely seen an industry with so much government support. Frankly, it's very hard to understand why there is so much government support for that industry. It's the taxpayer, but it's kind of like you get the tax credit, and then they get the incentives. There's so much government support. The government support for these industries is a tailwind, like I have very rarely seen. And so that's why Enphase, of course, being at the forefront of these subsidies, is very profitable. The EBITDA margin is 18%, and so even with predicted revenue growth of 3%, you still get a 21% on Rule of 40, which is also not good at all. But of course, we gotta ask ourselves, what is the long-term revenue growth rate for Enphase? What is more reasonable? Well, I believe something more reasonable is closer to a 30 to a 50%. And no, that is not me being delusional. If you look at the S-curve adoption of solar, we are just at the beginning of this space. We're just at the beginning of this revolution. So no, this is realistic in my view, and I own Enphase for these days when growth comes back. But of course, when growth comes back, the valuation is gonna go up, and the company will not be trading at these levels. Now, a stock which you could argue, for example, Enphase. You can clearly argue a company like Enphase. The fact that it's down is mostly systemic. In the case of SolarEdge, I believe this is an idiosyncratic problem for the stock, which is, again, the technology is not the same. String inverters are an older, bulkier technology with a single point of failure. There's a lot of issues with installers who don't want to install the string inverters, who are very heavy, and you got to put them on the wall. And then there's, of course, the issue of firefighters that really don't like to have a giant DC wire go through the roof. And then you have the issue of electricians who can handle AC, but who are very scared of having, a 600, 800 volt DC line in your roof, right? But they can handle AC. They've been working with AC forever, but not with DC. There's a lot of fundamental reasons underlying why I believe SolarEdge, that was the right technology in the early days of solar. More and more, especially as I study more gallium nitride for Enphase, more and more SolarEdge I think is not going to be the technology. And I had bought it because they had found some success in the commercial sector, but I sold that stock. I took my loss, put it into Enphase. So I'm not invested in SolarEdge. And you can see obviously they are not as suited for profitability as much as Enphase, and their EBITDA margin is negative. So this is a company that's losing money. I would personally stay away. And if you add things like unfortunate things like they have issues in Israel, and there's a war, and it's just a tough company to own in my view. And the same is true for Tigo. I had made a video for Tigo when they IPO'd. I was very excited about Tigo. I thought it was a very compelling play. And then the CEO, I don't know what to say. You had an article with a CEO saying we're gonna grow 300%. We're so excited to go public. And then 3 weeks later, you have the biggest downgrade in growth predictions I've ever seen in my almost 15 years of analyzing stocks. So I don't know why the CEO would say one thing and then 3 weeks later say another thing. I don't know how a business changes, from very, very bright to really, really, really awful in a matter of 3 weeks. And so there's a problem of I don't want to invest in a management team like this. And that's saying a lot for me, because I typically don't care about management teams. And so that's also why I'm out of Tigo. But it's cheap. There's no denying that it's cheap. And Tigo has these tiny boxes, these tiny systems that you put under your solar panels. They're called optimizers, right? And these optimizers allow you to kind of get a little bit of a hybrid, a little bit of a benefit between the microinverters and the string inverters. So they have staked out a specific place in their marketplace, but nonetheless, they're still losing money, and I would not touch that one. A company now that I think is interesting, but I've been surprised by how poorly it's performed. I've never owned it, but it's Sunpower. Sunpower is dirt cheap. I have on this channel you may notice that I have a value investor stance sometimes. Like everybody, I get tempted by value stocks sometimes. Yeah, well, when I look at Sunpower, I see a lot of value, right? It's very, very cheap. Look at it. Enterprise value is $800 million, and they have almost 1.7 billion in sales. So it's a pretty dirt cheap stocks, but when you look at the margin is awful at 14%, and that is because of course they make solar panels. But I believe they have the right technology. They use microinverters at Sunpower, and these microinverters are manufactured by Enphase. They are older versions of the Enphase products. But despite all of that, this is a stock that is still losing money on EBITDA margin, and that is still not predicted to grow. And so it's a stock that I can't own. as much as I love how cheap it is, I can't own it. The more I analyze solar, the more I go back towards Enphase. The more I analyze, whether it is the technology, whether it is the past performance, whether it is who's going to make the most money out of IRA, whether it is the customer service aspect of it and the customer satisfaction aspect of it. I'm very compelled by Enphase the most, so I keep going back to Enphase. Now, what's another stock that, again, the value investor in me is interested in that stock? So from a value investing standpoint, Canadian Solar is very compelling. But Canadian Solar, well, first of all, you can see on the numbers that I care about, like Rule 40, for example, is not it's not as good as Enphase, but you're going to tell me this is well compensated by the valuation, and that would be true. I mean, enterprise value over sales over 0.6. I mean, this is a dirt cheap stock. I just happen to be into Enphase because I know how much subsidies are coming for Enphase, and I know a positioning in the marketplace. Well, Canadian Solar, they've been around for a long time. The past performance has been good for some periods, not so good for other periods, but that's the nature of solar. It's a cyclical market. It's a dirt cheap stock right now. I think it will rebound, in my view, but I don't want to own it because it's a Canadian company. I always have a hard time understanding a lot of the things going on in Canada. Like, I have the same issue with Shopify. So that's another question. But anyways, that's one point. Another point is I find them scattered. They do a lot of different things, and I like a company that is focused on one thing. And so that's the reason why I'm staying away. Now, all of those reasons you could easily dismiss all of those reasons and tell me, yes, it's true, but look at the valuation. And I agree. The valuation is dirt cheap. So maybe I need to do another deep dive in CISQ because that Canadian Solar, because that valuation is dirt cheap. Now, moving on to stocks that are perhaps a little easier for me to eliminate. This is what I'm going to call the picks and shovels stock for the commercial solar sector. And remember what I said about the commercial sector a second ago. I think solar will be much bigger for the residential sector than it will be for the commercial sector. Remember, in the residential sector, we're entering a world of convergence. We're entering a world where everybody's going to have an EV. And if you have an EV, then it makes having solar on your roof much, much, much more compelling, doesn't it? Because then your solar can just charge your EV and you get free transportation, essentially. And the car drives itself, you literally get free, free Uber or free taxi forever. There's going to be the use case of having that superpower on the roof, as Tony Seba calls it, right? The use case of having, 7 to 9 times more energy than you need on your roof, right? That use case is going to keep growing and growing and growing. Most people don't see it right now, but think about all of the things that households, homeowners are going to be able to do thanks to that excess energy. I think it's going to be quite tremendous. It might actually increase the value of real estate, if you ask me. Because if you have a bunch of solar on your roof, then you're operating a mini power plant for yourself. So, anyways, that's one of the reasons why Shoals, ARRY, and Next are less interesting to me, because they focus on the commercial sector, and I think it's a great space, but not as good as residential, because if you look at commercial projects, they take longer, right? They take longer. You need more approvals. There's more dealing with the local communities. There's dealing with the utilities. There's getting the utilities to connect the systems. These are long-term systems that take much longer to set up, which is why these stocks over the long run tend to be more stable. That could be an advantage. But they take longer. That's why I just think it's too secondary compared to the mega trend of solar. I find them too removed from the solar mega trend. But anyways, nonetheless, so Shoals they do electrical balancing systems for large solar fields. So they deal with electrical connections, and that's what they sell. And that's how they harvest some of this solar now. My spreadsheet is telling me that this is the most compelling stock, because the company is predicted to grow at 20%, and the EBITDA margin is there at 16%. So my spreadsheet is telling me this one, along with Canadian Solar, these two stocks are very compelling. Now, of course, if I were to use EV over GP over revenue growth to pick a stock, I would likely not pick any stock in the solar space, because of the revenue growth is not there yet. I expect the revenue growth to rebound for Enphase by a lot. I don't know about Shoals. I think because of the long-term nature of these projects, Shoals is gonna be a steady Eddie in terms of revenue growth. Then moving on to what I call the rack system, or the solar tracking systems. So these companies, whether it's ARRY Technologies or Nextracker, or what these companies do is they sell the racks to set up the solar panels on these solar fields, and that is what they do. And again, so in the case of ARRY Technologies, they're not predicted to grow that much, which is why they look so expensive on my spreadsheet. They look like the most expensive in my spreadsheet, but the EBITDA margin is high at 16%, so that's interesting. And Nextracker fares better in my spreadsheet, and that's mostly because it is predicted to grow at 19%. So, but I believe all of these revenue growth numbers are messed up right now. In my view, they're all messed up right now. This is perhaps not the time to rely on the spreadsheet as much for solar stocks, but this is the time to actually qualitatively assess these companies and ask ourselves qualitative questions. So, finishing the video and answering the question, who wins for me? Well, that would be Enphase. Enphase for me wins by a long shot, and then I want to give an honorable mention, or a more research is needed mention, to Canadian Solar. They definitely deserve an honorable mention on this one, but I don't own it. I own Enphase. Very happy to own it. And again, let me show you, after the 70 to 80% crash, if you look at the total return of Enphase, you've still handsomely beat the triple Q, which, remember, it's 15 to 17% over a long-term triple Q, at least over the past 15 years. So it's handsomely beat that, and it's a 16% annual return over the past 12 years. So I'm very happy with this type of return for Enphase. And this concludes the video. This was not investment advice. This was no financial advice, just entertainment. Hoping you were entertained. Please like, please subscribe. Thank you for watching, and have a wonderful day.